Welcome to the Daily Brief, where I'll go over the action in the market for Monday, November 14th, and then see how things look for Tuesday, November 15th. And I'm only posting a Daily Brief video today. I'm still dealing with this inner ear infection. That's one reason, but within the hour of me starting to record this, all of the power is going to be shut off as construction is happening where I currently reside. So I wanted to get this finished, recorded, and uploaded just as soon as possible, or else it's not going to happen for today. Well, Monday's session was pretty quiet and not necessarily surprising that we fell back. We are in a short-term and somewhat intermediate term overbought condition. And even with Monday's decline, we still didn't really work that off. There's still a lot of our indicators that are extreme positive. And as I usually say, it doesn't mean we have to stop here. It just means that we've gone up too far too fast. I mean, 6-7% in 2 days last week. And so just a small decline, a little bit of sideways action on below average volume is not necessarily surprising right now. Things are holding up for the most part, but we still have some overbought conditions, at least hanging overhead currently. So let's go back and talk about what happened. Right at the open, we did have a lower open, not necessarily surprising, not a huge lower open. We opened at the daily pivot at 39.80. We're still dealing with that 4,000 level. And then we dropped down a little bit below the daily pivot at the unchanged level. And that acted, it should be as support. Sorry, there's a typo right there. As the day went on, prices broke out, but did not even get up to R1 at 40.15. So we did get above 4,000, but we were not able to stay above 4,000. And then we went back below that and we closed at S1. We actually fell down to S1 at 39.58. And that's just about where things closed. We closed at the low for the day, and we were down 0.89% on below average volume. And as I stated, the technicals are still shifted and leaning more towards positive. If we see follow through weakness, well, we want to look at the intensity of any selling that is happening, especially as we get closer to the end of the session. Inflation and interest rates, as well as some Fed speak. We had some of that come out on Monday that I'll go through. And that's really the big fixation. But we have all these other things as well with Russia, Ukraine, earnings. There's going to be a lot of earnings coming out in Tuesday's session. And the midterm election, even though it looks like the Democrats are going to take the Senate or keep the Senate, the House is still up in the air, and there's still a few races here and there that aren't quite settled, and we don't know when that's going to happen. So that's kind of an unknown right now, what may happen there. And then the Iran-Saudi Arabia situation, not really hearing much about that, but just being aware of it nonetheless in case it really escalates and has an influence on U.S. stocks. Here is the intraday chart where we did open lower right at the pivot. We tried to drop down initially, but then for a lot of the morning anyway, we were just kind of treading sideways. We'd go down a little bit, then come back up, and we were just dancing along the unchanged level. We finally broke a little bit above that. You can see R1 is above any prices that we got to. And then as we were going into the close, we saw some weakness. We went below the unchanged level down to the daily pivot and closed at S1. So what are some comments? The market did pull back after 2 strong days, and it was or is still overbought. It was overbought before Monday's session. It continues to be overbought. And here's some Fed speak that we had where Fed Governor Waller, who's a voter, said, "We've got a ways to go before stopping interest rate hikes." Well, the market didn't really like that very much because they're trying to go with this version 6.0 or something of the scenario that maybe inflation has topped out. It's starting to come down. And so the Fed can relax a little bit with raising interest rates. They'll still raise them, just not necessarily as much as the 0.75% that has kind of been the norm lately. And then we also had Vice Chair Bernard said that it may soon be appropriate to slow the pace of rate hikes. Well, the market kind of liked that one. So that was taken as a bit more positive. The dollar was up and interest rates were up, and that gave some headwinds to stocks. So that was pushing back on stock prices. The VIX, because we had a down day, it's no longer oversold when we're looking at the RSI 9 period. I don't have a chart of that, but it's no longer extreme negative. And then in the short term, we have the Stoch RSI, the stochastics, the short, intermediate, and long-term chart, and the Williams percent R. Those are all extreme positive. Even after Monday's decline, they haven't fallen down from their extreme positive readings. In the intermediate term, we have the BPI, the two CCI charts that I go through, the PMO studies, both short, intermediate, and long-term, so there is some overlap here. And the rate of change going back 5 periods and 20 periods, those are still extreme positive. So they have not been worked off currently. The new highs, new lows, they're not breaking out. Well, with a down day, they weren't really breaking down either, but they are continuing to improve. They're still kind of riding that wave from late last week of improving, but we're not really seeing a raw value generated each day as a real breakout, at least yet. And we still have our inverted yield curves with the 30 to the 5. It's no longer inverted, and it hasn't been for the last few sessions, but it's really close. And so that's why I'm keeping it on the list, but I have it in blue because it's not inverted right now. Sentiment is still positive. We're still tipping a little bit over to the side of the more positive side of things without being extreme. We didn't have any economic reports that came out in our trend. And I'll show you an ADX chart today. It's been a while since you may have seen that. The trend is still neutral overall because we're below 20, but it's starting to turn up, and it hasn't quite crossed the moving average. And the the green line is still on top. So that's a positive bias. Because of the down day on Monday, I've switched our bias back to mixed. It was a down day, but it wasn't a strong down day with an awful lot of conviction, at least from what I was watching. The momentum, I'm still keeping it positive. Now, if we have another down day in Tuesday's session, that might change. And again, as I said before, if we do see some pulling back, we're going to want to watch the intensity of that. This is a chart that I found on Twitter over the weekend. And I showed this chart a while back, and this is just a different version of this. I hope I'm not violating anything here by this little copyright thing down at the bottom, but the person put it out on Twitter. But this is comparing 2008, which is the green line here, and how stocks behaved back in 2008 when we really had all of the problems. And then overlaying what's happened so far in 2022, that's the white line. These are both the S&P 500, and how it's matched this fairly closely. The little blips up, the little blips down, and so forth. Well, we're right about here. If you can see my pointer, I'm circling where we are bouncing back up. But look at what happens, at least in this model, going forward. Going into the end of the year, things end up not looking very good. Now, I just use this as kind of a guide, just to be aware of this, just to notice that, yeah, we followed this fairly closely for the whole year. Actually, it's been longer than a year, but does that mean that this is necessarily going to happen? Not really. But there has been a pretty close correlation. So we will have to see if we do end up really matching what happened back in 2008. Then this is the ADX chart showing that we're starting to turn up ever so slightly, but we're not quite across the moving average. The green line is on top, even though it declined, and the red line is declining as well. So if we can turn back up and get above 20, that would be a trend. And if the green line continues to stay on top, that would be a positive trend. But for right now, we're just showing a weakening trend. Now, some of you that use this to determine whether we're trending or not trending, because there's different strategies that you implement in those environments. At least that's what I teach and that's what I do. Once we go above the moving average, that may be a good enough signal for you. Some other folks that use the ADX, they want not only to be above the moving average, but they also want to go back above 20. So that's more of a personal preference. And sometimes it might change. You might be willing to follow the moving average crossover at one point, but in other points when it's a little more cloudy, you might want to have a confirmation of going above 20. Then here's our daily chart showing how we almost got up to R1, not quite. That was at 40.21, where our high was at 4,008, almost 4,009. So we didn't quite get up to this level before coming back down, and volume dropped off. It was below average. Here's our moving average chart. We're still dealing with the 100 period, both the simple and exponential moving averages. 200-day simple and exponential moving averages overhead. And this acted as resistance back in August. Some of you may remember that. We have not yet gone up and really tested this at this point, but we're still above the 100s and the 20s and the 50s, the other moving averages that are plotted here. This is also showing how we hit overhead resistance. This is a fib level at 61.8 from the high set back in August to the low set back in October. And that's about as far up as we went before coming back down in Monday's session. So what's our outlook then for Tuesday? Technicals, they remain positive, but we're still somewhat, or in the short term, we're still overbought. They fell, but not all that much. The intermediate term, we still have a mix. There's a few of our indicators that are overbought, with a few of them not overbought. We have the PPI coming out. That's kind of the biggie that's going to be happening in Tuesday's session. Then we also have the Empire State Manufacturing Survey that applies to New York, but New York is important. So this is something that may not have a real influence on the market, but we still want to pay attention to it. The whole list of geopolitical events, with right now the stock market is fixated on inflation and interest rates. We'll have to see. Are we going to get any more Fed speak that could come out? And then possibly any more clarification on the midterm election. So our scenarios, not going with the ups or down scenario or the up scenario currently, because the ADX is below 20. But it is getting stronger. And so if we do cross more decisively above that moving average, I may highlight the positive if it's still positive, but maybe with a little different color. So our conclusion then is the S&P, it's still positive, but continues to be overbought, specifically on a short-term basis and somewhat on an intermediate-term basis. Long-term, we're still negative. So we've got lots of repairing to do there. As long as we stay below that 200-day moving average, we will remain negative overall. So thank you. Have a very good Tuesday. The power's going to be out pretty much all day, all night for me. I anticipate being able to do some kind of a video before Wednesday's session, but if things don't go according to plan, I'll do the best that I can. So have a great day, and I'll talk to you in the next video.